I'm Beth from Your Wealth, and I'm with Roxy and Hannah from RH Financial Services.
Hi, I'm Roxy. So we are representative whole of market mortgage and protection advisors. We are based in York, but we do cover the whole of the UK.
Hi, I'm Hannah, and today we'll be answering questions and common misconceptions that Bethany gets asked during her working day.
So we work with a lot of clients who are self-employed, and often when we're working with them, they come to us with queries and worries about how they will be able to get more lending. So how do you work with clients who are self-employed?
Well, a brief overview would be a lot of people think you need to have 3 years accounts. That isn't the case now across a lot of lenders, and some self-employed people can even be treated as employed, and we can use pay slips depending on their circumstances.
So when we compare a sole trader versus a director of a limited company, we can also take the income in different ways there. So we can look at if you take dividend, but also some people don't take the dividend out of their company, and they hold their funds within the company as net profits, and we can also take a share of that. So it's a good way to kind of boost income multiple if you don't always take all the money out of a company. And we also do work with startup businesses as well, because as Hannah mentioned, you don't always need 3 years accounts. We can work with lenders who just use 1 year's accounts, and also projections if you are obviously building your business.
So we often work with clients who have been in a fixed term for a long time with their mortgage, and they're approaching the standard variable rate. What would you recommend for clients in this situation?
Because we work with a wide range of lenders who all have their own products, people will generally stay with their provider based on kind of a misguided sense of loyalty, that there nowadays is not really much loyalty in lending. Some lenders will offer kind of existing clients preferential rates, but if your circumstances don't fit that, then you will have to look at the wider market. Moving lenders can often save you money and potentially lend you more money if your existing lender is not able to do so. Would you say there's anything else that...
No, I'd definitely say it's a kind of a touch point to be able to review your scenario and your circumstances as well. I think mortgages are taken over such a long period of time. When you come to the end of your fixed rate, it's a really good point to have the conversation and to check that mortgage still works for you as well. And if you do stay with the current lender, it would mean that it's on exactly the same terms. So it's a point to be able to review things.
So last question, there's lots of people who are looking to get onto the property ladder as first-time buyers. So what would be your advice to them?
The biggest bit of advice that I would have for somebody looking to purchase their first home would be to speak to a mortgage advisor as soon as possible. And that's not a sales pitch. It is just so that you can be in the best possible position. We will review everything from your credit score, your income, your expenditure, and your scenario. And you will know through this process what your maximum borrowing would be. You'll know whether then you can achieve the property you want to achieve. And if you can, we'll put you in a position that you can get an offer accepted with an estate agent. And if not, we'll put a plan in place to be able to get to the point where you can. So it's definitely a really good decision to speak to somebody sooner rather than later. Do you have anything to add?
I would agree that knowing your monthly budget and what you want to spend each month is really important, and knowing that sooner rather than later is best.
Thank you for that, really helpful. So what's the best way for people to contact you?
Well, you could find us online on our website, which has got all our contact details, and you can contact us via there as well. Thank you.